do talk about the sentiment a lot because Wyckoff method, as we've stated many times before, is in essence a contrarian method. So you have to practice not just on the technical level of identification of the price structure, what the volume and spread is doing, what the relative strength is doing, but also practice identification of the correct sentiment at the correct price structural spots. And usually we wait for those extremes. And Bruce, what did we hit 8 or did we hit 6 at this most recent bottom?
I saw a 6. It'll change intraday. This is an end of the day. No, it's not even in the end of the day. But that we were able to capture the 8 as a screen capture. But I do believe we saw a 6. Doesn't matter. But but you also can go in. If you go to the website, you can actually hover your mouse over the this chart, and it'll show you the low and it'll show you the highs and so on. Yeah, so I think that you'll see that.
By the way, 2020 was at 3. We hit just recently 6. So this is a very interesting phenomenon, because when you look at the way of how COVID low was formed, there is a lot of violence, there is a lot of aggression, there is a lot of price movement, there is a lot of momentum. And here we don't necessarily do that. And that's the character of this bear market. It's going down, it's kind of going down slowly on the indices. It's going much faster with specific stocks. Like you look at NASDAQ stocks, individually, they're just like dropping down. I mean, like look at PayPal. It's just like almost like verticality down, something like this. Look at Walmart just recently, the most recent, like 5 days, vertically down, and so on and so forth. But when we look at the sentiment, 6 is pretty low. And this is where you have to kind of shift your mentality and start thinking about, is the price structure, is the price and volume relationship is showing me some kind of deteriorating conditions of selling just because everybody already have sold, and maybe some emergence of the demand. Bruce?
I think that one of the keys here, you have to think about sentiment as an environmental indicator. It's not, I mean, I used to really look at the put call data very, very closely. I did it all by hand. I'd get it out of the paper and I'd look at the volume characteristics and so on. And I could almost pick off the day of the high and the day of the low off looking at the volume characteristics internally. But normally you can't use sentiment that way. You have to look at it as environmental. So what do we have here? We environmentally know in this time period, this time frame, that sentiment is very extreme, very pessimistic, and that it could suddenly produce, we don't know exactly when, we might be able to pick that up in Wyckoffian analysis of the bar charts, something Ramon and William do so well on Monday mornings, is do it in the tape reading class, and you can develop those skills. But we do know that everybody's leaning to one side of the boat and the boat's tipping. And we want to be really careful because we don't want to be caught with everybody else. So if you are a short seller, you just want to tighten up your stops, be super disciplined about protecting your profits and so on, because you're not alone out there. There's a lot of people doing what you're doing. If that's in fact what you do.
And as we look at the most recent data here for put and calls, I mean, like this is exactly what you and I talked about like a month ago, that the high in this indicator is going to be lower than COVID, and it's going to be somewhere on par. And we were thinking that it might actually overcome this high and be somewhere in this area right here. Now, I have a hypothesis of why it didn't do that. Well, first of all, we could still go there. We could still drop from here.
If we get a climax directly.
If we're going to go into capitulation, that would be it. But also at the same time, I'm thinking because we don't have a capitulation, we don't actually go there. It's kind of like an interesting observation here.
And that's the reason that maybe you don't want to like cover all your shorts. You just want to become super defensive. You just want to protect if the market starts to move against you, you just want to make sure that you can lock in your profits. That's all. And
would you say, Bruce, that tactically this is the environment? I mean, like currently, today, is the environment where you could have both shorts and longs at the same time?
oh, for sure. Yeah, I'm seeing things to do for sure. And also, like, note over here on the left side of this chart, look at those two big peaks that are roughly in the area that we're at right now. See in the green, which is the 10-day moving average. This is the far left side, way over on the left. So you can see those two peaks right there. And look at how those are accompanied by important causal lows in the structure. So you can see the bases there, and they both result in rallies. So we are going to get some kind of a basing structure, and may get it from this level on the put call, or we may get a further decline, then we get the basing like we did with COVID. Because remember, I showed you the point and figure chart that we were able to get off of the COVID low. And so we will get a cause. We will build one at the final low. We're getting something akin to green shoots in here. So I'll just leave it at that for now, but we're going to watch that really closely week to week and try to identify a mature, complete causal accumulation structure that coincides with the extreme fear that's in the market.